Good morning, everybody. Welcome to the Flow Show, and we're all ready to see what pips we can pick up this week. Morning, K-Man. You got your picking machine ready to go?
Good morning, Ryan. Good morning, everybody. Yeah, for the time being, it's light pickings, but yeah, we're always ready for what's to come. Huh?
Yeah, hopefully. Yeah, and probably today we'll be looking at getting ready for the rest of the week because there's not much happening at the moment. But I'll get through all the headlines. Not that there's a lot, and then we'll see what's in store for us this week. Over in Japan, the business lobby Kindenman says that preliminary data shows average wage increases of 5.58% this year for big companies. So it's the big companies showing those. What Kishida and the rest want to see is those wage rises coming into smaller firms as well, which make it a bit harder sometimes for those guys to raise wages. However, Bank of Japan survey out says that many firms have said they can no longer hire enough workers if they curb wages, and that more firms are starting to pass on rising labour costs to sales prices. That will be absolute music to the ears of Kishida and the Bank of Japan as well. That's the virtuous economic cycle they want to get going over there. So lots resting on this new start to the fiscal year in Japan. We could probably forget that data last week, the poor GDP for Q1. All eyes are looking to the future. Over at the Bank of England, we had Broadbent out this morning saying it's possible the bank rate could be cut in the summer. Policy is more restrictive now than the first half of 2023. He says less restrictive rates depend on the data evolving, but policy will have to become less restrictive. We do have big data for the UK this week, which we'll show in a moment. The ECB squawkers, ECB's Kazakh says we're on a path to 2% inflation. Monetary policy is working. Another one getting a victory laps in at the moment. The rate cutting process must be cautious and gradual. A June meeting is quite likely to be the start of ECB rate cuts. We'll look at the data again after June. ECB's Vasile says a cut in June would be reasonable. He is awaiting data and is open to possibilities on the rate path. Schnabel, meanwhile, says July cut doesn't look warranted. Over at the Fed's Bowman has reiterated that she's willing to raise rates if inflation stalls or reverses. And we've had the Ryanair CEO this morning saying that European airfares could continue to rise over the medium term. So that's going to add some inflationary pressures to that over there. That's it, Kay. Very quiet one. You got anything you want to chuck in? Apart from Morgan Stanley being one of the last stock bears thrown in the towel?
Yeah, and what is it? The shadow central bank of the RBNZ saying that they should keep rates at 5.5%. Well, yes, that's we are going to have the RBNZ this week. We saw some expectations coming out, yeah, of the New Zealand inflation, and that seems to be. Where is it? Is that, let me just look at it. Did that come out a little lower, but it's still holding well above 3? No, I think it's roughly the same as it was. So that for the RBNZ. No, for the rest, yeah, we heard about the helicopter crash, the Iranian president. No, I don't see much coming out over the weekend that is going to change the markets that we are looking at anyway.
No, exactly. I think China left their LPR unchanged early hours of this morning, so that was no change there on rates. But they're still touting the potential for an RRR cut this quarter, but they're not changing their little bits and bobs at the moment. So yeah, let's go through what we've got coming out. Absolutely nothing coming today. So it's probably going to be a bit of a quiet one. There's a few countries on holiday. Tomorrow we get RBA minutes. Not that that should tell us an awful lot. We know that rate hikes are still on the table, but they're well in hold mode at the moment. We do have some PPI data from Germany to look at for inflation viewpoint, and then we get CPI from Canada tomorrow, which is the only data from that side of the pond. So that's going to be eagerly watched, no doubt, for BOC and when they may start to pull the trigger on cuts. Then, as Kay mentioned, the RBNZ on Wednesday. Pretty low expectations for this, really, Kay. Not expected to change rates, but as usual, it's going to be about the forward guidance, isn't it?
Yeah, and we have heard that we know that OR can do 180s. He's done it in the past. So although we don't expect much of all of this, we never know with OR. So fingers on the buzzers, I would say. And if he comes up with something which, looking at where the yield, where the rates are, a bit contrary to what's happening in Australia. I wouldn't rule him out saying that. Well, I mean, the path for the expectations are for lower rates, but yeah, that would be like the surprise if he really goes dovish also. That would be the surprise trade on this one. But it's relatively. It should be a relative non-event meeting.
Yeah, definitely not one I'll be getting up for, I can tell you that. And Wednesday, then we get a lot of inflation data from the UK, which again is probably going to be the highlight of the morning in terms of what's going to happen at the BOE. Now, is expected to come down quite significantly in this data. Let's get it up for you. Where should we go this week? So we're expecting quite a move in CPI from the UK. Headline number is expected to drop to 2.1 from 3.2. So it's over a whole big figure coming down there. It's been touted by some of the Bank of England. Ramsden was the one who said inflation will be close to 2% in April. The core coming down a big chunk as well, 6 pips to 3.6%. You know, my thoughts about the UK and inflation, it tends to be stickier than many expect. The balance of risk for me is that inflation doesn't drop as much as expected. Yes, we do have this energy cap cut that kicked in April, so that'll be seen in these figures. But we've still got hot wages, still got hot service inflation. The PMIs have said nothing but increased prices. So I don't know. I think if I had to pick a side, I'll pick a side that says that these numbers would probably come in higher than they come in lower. And that's the balance of risks for the markets, because everyone's expecting this low number, including the Bank of England. So what can go wrong? So the big price risk is if it isn't as doesn't drop back as much as expected. And historical evidence suggests that may be the case. If it does come in, then that's probably going to increase bets for the BOE rate cut in June, and we'll see what the pound wants to do with that. Maybe it's just we get a confirmation sell-off on that data, and then we'll see what happens after that. So there's going to be lots of trade on this one. You know, pairs like cable. If you get a big sell-off in the quid, is that going to be a dip buying opportunity? Same with euro sterling. Are we going to get into a ECB style move where we know that cuts are coming and the euro doesn't really move on that anymore? What are your thoughts for this UK data, Kay?
Probably famous last words, but I find sterling being extremely resilient with even with those expectations. So we are like less than 48 hours away, and the sterling is doing pretty well. So is the market already trading a possibility of a stickier number? I don't know, but I mean, last week it was again a week where the sterling traded a bit better than what people may have expected. And we're starting the week on a relatively positive note as well. We're still hanging around that 127 in the cable. Euro sterling still looking a bit heavy. Look at the sterling crosses still being relatively well supported. Of course, I mean, as we've been saying many times, I mean, sterling can all of a sudden turn around, and the market getting a bit emotional about it if we really print that low one. Looking at the low expectations, it may be that we see a bit of a stickier one than what the market is expecting, because that's a big drop, which would put it like in cutting territory, right? Well, not if you look at the core really, but if you look at the headline number, and they will always take the one that
suits them the most.
it suits them the best, right? Especially that we have two of the important ones, plus broadband now. I think in the camp where they rather cut than keep the rates where they are, especially as well. There's a bit of political pressure coming in. That is one thing that came out over the weekend as well. Some backbenchers of the Tories saying that the Bank of England is putting pressure on the private because of their QT actions. But sterling is still behaving pretty well. So that's going to be an interesting one on Wednesday for sure. Because if we get a little stickier one, and we are still by then trading this sterling on relatively decent terms, that could be a bit of a kicker to send sterling higher, and perhaps not especially versus the dollar, but on the cross side as well. And I'm thinking about stuff like euro sterling, for instance. That 85 and a quarter is solid as a rock up to now. But get a bit of a stickier one, people will start to think about, hey, let's not forget that on the 6th of June, we will have the ECB, and they are likely going to cut. So are we going to see another test of that 85, the figure? That is one that I'm going to keep a very close eye on this week in sterling. Together with what's happening in sterling Swiss, which I'll be showing shortly as well, because we are in a pretty important zone here, which is about 1% wide, but it's a very important zone we are in. So sterling is firmly on my radar this week indeed.
Yeah, very much so. I agree with that. And euro sterling will be right on my radar if we get down to that 85 level again. As you say, it's been rock solid, but I have been hanging around for 85, 85.05, 10, but I might have to adjust that and start getting in around that 85.20s. Excuse me, because we seem to hit that more times than we hit the big figure. So it looks like the better place to start adding back to my longs. But yeah. Rinse and repeat, I think. Get the washing machine on.
And it's such a clear trade if it would break, right? You know exactly where your risk is. Yeah. That is, if you're looking for a technical trade, it's a pretty clear one. Right or wrong, you know where your risk is, right? If you really start to break at 84.90, it's probably toast, right?
Yeah, exactly. Right in the bottom of that zone. Yep. So clear it is, and but let's see what happens. It's come through a lot so far without breaking, but nothing lasts forever. Right, what else we got going on? Not a lot in the US. We have some housing data this week as well. We got FOMC minutes, which again shouldn't be anything special, but we always keep half an eye on it in case there's something in there we haven't heard 50 times already from Fed members since then. Thursday, we get stuck into the new PMIs for the month of May. We've got all the flash numbers coming through from around the world, all the way through to the US as well. As you can see, their new home sales data on Thursday as well. Friday, we get some CPI data out of Japan. This is national CPI for April. We already had the Tokyo CPI, which saw quite a significant drop in inflation. CPI, core CPI expected to drop to 2.2% from 2.6%, so sort of mirroring what we saw in the Tokyo CPI. I think for this one, Kay, it's going to be a question of degree. If it's, you know, a pip on and around expectations, market's probably not going to do much. But if it's a bit worse, we're probably going to see some hike expectations redrawn. I think maybe the timeline pushed a bit later if it's a real soggy one. What's your thoughts on that?
Yeah. I think once the CPI is over in Japan, so we will still be like 2.5 or so, or 3 weeks away. Oh no, we will be even 3 weeks away. So perhaps a bit too early to already start placing bets on what the Bank of Japan may do over their next meeting. As I've already been saying here, if we are at equal levels, not only dollar yen, but yen versus all those crosses, I think they may be tempted to at least bring expectations forward, if not really press the button to go officialize interest rates into positive territory, and perhaps that CPI may give the market a hint whether they can go for it. You know, a bit stickier than imagine that the national cost stays around 2.6 instead of the expected 2.2 drop. They may we may start to see some bets on earlier rate hikes. So yeah, that's the other one to keep an eye on. If in turn it comes down, then UAD is probably going to be trapped again, and we should be lower for longer. And we are, interestingly, really basis point per basis point, creeping up to that 1%. Yeah, in the 10-year JGBs, we're trading at 97 BPs now. We are slowly but surely getting there. And last week, he wasn't panicking at all. But I mean, Suzuki already said, where he shot himself in the foot regarding interventions and the level of the yen, that he was already watching the levels of the JGB yields. So yeah, it might be getting very interesting towards the end of the week in the Japanese yen. In the meantime, we have seen absolutely no reaction to those Keidan Ran expectations of those wages hikes. But also, let's not forget that they represent unions and stuff, and that there's still a bunch of non-unionized workers where we don't have really the final results yet. So we will have to wait and see on the numbers of the real wages coming out at the start of for the start of this new fiscal year, right? So that's going to give the market another idea of what to expect for the Bank of Japan, at least.
Yeah, and that survey will be, as I said earlier, that survey will be good news for them. So following up on Friday, UK retail sales, which can be a bit hit and miss. If they're bad, expect the weather to get thrown at it, because it's been atrocious in the last couple of months. So that can tend to impact sales quite strongly. Bit of GDP data for Germany, see how bad things are over there. And then durable goods from the US, retail sales, and the Michigan numbers finish off Friday. So not an overly big week particularly for the US. Some bits and pieces. As I say, UK probably the most the bigger numbers that we're going to get this week. Maybe the most market moving, and we better take a look at what may be happening on the prices front as well. So coming into this week, start with cable. We're still knocking around these highs, this 127. Now, I said previously, it's a range you've got to be watching. We're just not able to make hay above 127 at the moment. So that's a bit of a concern, though we're not dipping back too far. This dip that we did get last week pulled back to where I expected it to. So, you know, it's doing the right things. If you're bullish on this one, it's holding support where it needs to hold. But it needs to crack on. So this could be a case of watching the clock. If it doesn't manage to break properly above 127 and hold it, and get above this highs 127.10s, then maybe we're going to see a steeper pullback. Whether that's data related or just naturally, we'll have to wait and see. But we could be hanging around for those CPI numbers. Euro dollar is doing the same thing as well. We're just not getting back up to test that 109s yet. So we got up to this sticky area, 109, 109.10. We've been here before. It's always been a bit of a sticky area. It needs to crack on. So this one won't be affected by the CPI in the UK, except maybe with a bit of sympathy for what it means for rate cuts. But it's holding up. We're holding the zone, the bottom of the zone, trying again just to hold up the top of it. But again, it's just looking a bit weak. So we've got a bit of indecision here. And the same thing applies. If we don't get a crack on for 109, 109.10, then the clock might run out. Short-term longs might get run out of patience, and we see a bit of a steeper sell-off, and we'll probably see the dip buys coming in around that 108, 107.90 again, unless something's happening in the dollar that might change things up. It's all a bit of a similar picture in these dollar pairs. Aussie can't get above 67, 67.10 and hold it. So we're in a similar position here. Support where it needed to, 66, 40s, 50s. So it's keeping the moment, keeping the momentum, but it needs to keep going, or else we again risk of a bigger pullback. I'm still a little bit nervous about dollar CAD, holding this 135.85, 136.10ish area. Bounces are still looking very weak. We've still got this downtrend on top of a bit of a longer downtrend. So I'm currently setting myself up for a break lower. Got some sell stops in or sell stop in just below those lows there. So we'll see if we get a break where it wants to go to from that one. But if it doesn't, if it bounces, then fine. I haven't lost anything because I won't be in a trade. So we'll see what goes on there. Quick look at the metals, and okay, we'll look in a bit more depth, but we finally resolved this 2400 level, and now we're just keep going. So for me, we did have these prior highs. You may want to look at them, keep an eye on them. They were, I'm going to call them incident highs. They came over Iran-Israel news, so they were sort of spikes. So I wouldn't trust them too much for being an actual level, though we did find a bit of traffic again into that 2420 area. So that's probably your nearest support from this point to keep an eye on if we dip back. As for the upside, well, the world is your oyster. It's going to be a case of picking the levels as they show up. We've got a bit of resistance, 2450, so that's your short-term level to keep an eye on. If we start to build something over the next session or two, it might suggest we've got a bit of a top in, then that's when you're probably going to see a bit of a pullback. But it's looking like a decent break at the moment, and it might continue going on. Quick look at yields. Keep an eye on the old 2 years, what we're looking at for Fed rates and whatnot. This is our sort of rule of thumb and how to look at the levels. Obviously, you can look at the yields in greater detail, but just looking at what it means in terms of expectations for the Fed just gives you an idea. You know, we saw the dollar selling pretty significantly when we got this move, then we got a bounce, then it was back down again. Yields have bounced a bit since Friday, but the dollar still remains a bit weak, and I think that's looking at it from Friday. There's a little bit of yen influence in there more than the dollar, because obviously dollar yen was gaining as well, and all the yen crosses were up. Maybe a bit of drag late on Friday, but these yields are holding up a bit now, mate, and the dollar's still looking on the weaker foot, shall we say?
Yeah, I mean, I was like reflecting a bit on that. You know, we spoke about this whole lot and this whole 1 week block of data that we had out of the US, and then looking at where the dollar ended last week, and then seeing what the Asia did with it. That take dollar China and dollar yen out of the equation for a bit. And I had this feeling starting the week that the dollar may actually catch up a bit on what's going on in equity markets, what's going on in the metals. And I woke up this week with a bit of a softer feeling towards the dollar. But okay, I mean, there's no data today, there's no follow through. European markets don't seem to be too excited about much. Although, and again, taking away a few of those pairs, if you look at euro crosses, euro Aussie, euro sterling, for instance, they look a bit on the weaker footing as well. Even euro Swiss is starting to find a bit of resistance, I must say. Yeah, maybe the euro and the dollar are going to be trading a bit on the same footing. Euro dollar just being the pair of to direct all the traffic through, because we've seen it a lot in Europe. Traditionally in Europe, there's a lot more cross trading going on than when the States come in. The States, they tend to trade the dollar and that's it. But in Europe, we see a lot more different crosses being traded, and euro looks a little bit weakish on the cross front again, and perhaps that's already without wanting to front run too much that ECB upcoming, but the repeated comments from the ECB members saying that June is really there. So perhaps already this market is already trading that, and we may see like euro dollar just being stuck. Just below this 109, but the rest of the dollars look a little bit on the defensive to me as well. And I wouldn't be surprised if we see the dollar like just slowly leaking. Nothing really dramatic, but I just wouldn't be surprised. And then on the other side of the spectrum, if you really look at low and high yielders, the global feeling is that unless Friday or unless we get surprise interventions, but dollar yen is stuck at 155.70. I mean, unless yen crosses are going to trigger interventions, which is very doubtful right now. So unless dollar yen spikes again, I think there's no intervention. So I don't think that on yen there's going to be an extremely lot happening to really support the yen. Only the one other side that I would say is that if the JGB 10 yield is starting to peak its head above 1%, that may trigger just a few flows, and I'm not going to exclude that. And for the Swiss, and I'll be looking at the Swiss pairs, we have come some way. I've been reducing my Swiss positions a bit again this morning, and especially the dollar Swiss because of my dollar feeling not being like the greatest pro dollar right now. I've went out of my long dollar Swiss for now, but I also see euro Swiss starting to peak a little bit around this close to 99, and sterling Swiss, as I will show, we are in a big zone here as well. And then to move over to the other side, the really high yielders. Mex is doing just fine. Slow leak on the dollar Mex, and Mex crosses are still holding up. So when nothing's happening, when the equity picture still looks positive, stuff like the real high yielders and especially the Mex, I would say, are still behaving pretty well. The rand is a different story because we are going into the last 10 days of before the elections over there. So we are going to have a massive amount of headlines coming out. I personally think that we are building, because the market is looking at the possible coalition over there to be very positive. And the SARB tightening the reins as well, but I'm starting to think we are in the process of building a big buy the rumor, sell the fact thing on the rand once the elections will be over. So that's about the feeling that I'm going in with globally speaking this week.
Yeah, thanks, mate. Agree with pretty much all of that. And Ali's just asked. Feels like you're doing the you're getting on the pendulum, Ali. 1 minute, dollar data is saying that everything's strong, and then we get these minor data, and the dollar gets sold off. ECB is heading for cuts, but euro dollar's on an uptrend. We were talking about this all through last week. The dollar had a phase where it's getting whacked. It's seemingly paused on that at the moment. We're not doing anything more in a lot of pairs, as we just highlighted. You've got to look at the overall picture. Okay, take a step back. Every central bank is looking to cut, except for the Bank of Japan, out the majors. So that's the theme, and markets are euro dollar still going up. So that tells you that euro dollar isn't really trading the ECB, or it has traded the ECB. It knows what the ECB is doing, but also that the dollar is the bigger game in town, or the Fed is the bigger game in town, because, as Kay said, you can look at euro crosses and they are looking a little bit weaker. So it's all about where currencies are weak and where they're not weak, and it's not always tied up with their own individual countries, as we just said from euro dollar. It's more about what the dollar's doing than the euro's doing for that pair. But just stick to the theme, mate. We get these pendulum swings. Next week, dollar could be back on the bus, and good data, strong data, and everyone's getting more hawkish again, and the dollar's rallying. So just trade the screens, mate. Trade the prices. We got these ranges. We got bigger ranges. If we can't break the ranges, there's only one other way the price can go. So don't get too hyped up about whether. What can happen with this data, that data, strength, weakness, whatever. Just follow the price action. And if you think you're going to fight it, then fight it. And know where you're going to be wrong if you do. But we're going to be playing the same old game for the foreseeable future. Kay, did you want to show us all those magic lines? Let me
okay, mate.
Pass it over.
Right. So we have to talk about the metals, and I'm perhaps going to spend 1 more minute on silver than on gold, because we saw a massive catch-up move there as well. But okay, we saw the spike again on gold, pretty aggressive. There's no other word. From 2370, we traded up to roughly where we are still now, but we traded up to 24.5. So we've broken above those 2 prior highs, which were really spike highs. This time it's coming what I would call more of a real move. So if you look for retracements, so the first one here around 24.30, I think that's a bit fragile. I would rather look at those 2 spikes, three actually, that we had in between those early morning Asian spikes. The real ones that we had here are rather around 24 the figure, but in between we will have the 24.15. But I would really say 2400 is going to be your big point of measurement now. If we see a bit of retracement, if we already start to hold 2400, then I think 25.30, which is also a long-term fib, that is really within sight, I would say, with an intermediate station around 24.75. This is now the next level I'm kind of watching. It's always a bit of a tricky one, because the market will do what it does, and they're not necessarily watching extension levels or so. But if you want to hang on to a few levels, there's 24.75, and then we're talking about levels into the 2500s, which may be a bit of a bigger one. As I said, it's a longer term extension as well. So this may show up here a bit bigger if ever we get up there. Of course, if always the same. It's always also depending on geopolitics, right? If we see a big cool down anywhere, there's going to be less of the need of perhaps having that part of gold regarding geopolitics. Okay, but in the meantime, it's still a very, very, very impulsive move. Well, silver really went for a walk there. I showed this, and last week this is the very long term from 2011 to down to 2020, the big drop. The 50% was around 30 and a half. On Friday, we just rammed through there. A lot of us in the room are long. We added just above this 26 zone here, and then I at least took a lot of profit on the add-ons, not on my base position that is still running, but on the add-ons I took quite a bit off into that zone here. On Friday, we have to take profits at times just to keep the account happy. Now I'm base long, so that 30, 50, 60 should already be a bit of a support zone, I reckon. I think the 31.5 is a bit too close to the market for comfort, but and that on the longer term as well. There are some levels in between as well, but those are more less important. I think the next one is 33 bucks. We are trading around 32 right now. And then there's going to be what I reckon is going to be a big fight around 34, high 34s, low 35s. If ever we get up to 35, you can see it's not only a FIB, but it's also levels that we traded around back in the days. 35. We had a last spike above, and then we started to come down. We hit our head again against the 35, and then we started the long walk down. So if ever we get up there, watch very closely what's going on there. I do think there's a part of catch up on what happened with gold, but I also think that it's a bit of a reflection of the soft landing scenario. Yes, the data are softening, but we can't say that the data are completely crashing away. And if the market buys that, stuff like silver, if they see green shoots, for instance, in Europe, if the market starts to believe, which is not the case on the currency because CNH is weakening for some reason right now. But if you buy, if the market buys or starts to buy a bit of Chinese revival as well, this one could continue to do better, okay? But still, always respect some levels. And if you see above 35, it's like a big void up to 40, right? But I'd say keep a close eye on if we ever get there, what's going to happen around 35 in silver, all right? So my base position, yeah, I let the add-ons go, but I'm keeping the base long, and because I want to see data now confirming the break, to perhaps push the buttons to go and have a look for this one. But you never know. We had sharp moves higher, and we also had big setbacks, right? Of course, this is all pandemic and things related. And these are the hikes, central bank hikes. But then, despite rates being high, and we've seen the same thing in gold, the metals can still rally because the market is buying the soft landing as well, and with a bit of a sticky inflation scenario. So there's still a lot going for them. So I'll be looking for levels, perhaps, if now we get like a bit of a move back down here, get a few weak stops out of the picture around in the high 29s, get down to low 29s, for instance. That may be a bit of a springboard to do the next leg, but I'll see how the week unfolds on this one. Swiss. Okay. We've come some way. We did come some way. If you look at the whole 2023 dump, when the SNB said that they would buy Swiss to combat inflation, we have now on the approach of the 78.6 of this whole move. I was expecting the first quarter into the second quarter, the Swiss to give back everything, but it's still there, it's still valid, but I'm starting to be a bit cautious on this one. So I've reduced my positions on the Euro Swiss already. Also in the back of my mind with what may happen on the ECB. So I've got less Euro Swiss in the books than, for instance, Sterling Swiss. Even though on Sterling Swiss we are in this zone, right? We are in a very, very, very important zone here. Oh, just one quick one back on the Euro Swiss. So the 78.6 comes in around 99.15. If that would go, then I think we are going to be talking about parity pretty quickly, okay, and perhaps above. I'm not going to, and I really think in a way that it's justified that the Swiss could weaken a bit more because it's a low yielder again, especially after cutting their interest rates, and the Swiss companies were not very happy about a too strong Swiss franc. So I still think it can happen, but sometimes we need to, as I say, also keep the account happy and take some profits and start to look at where those levels may come up. So sterling Swiss, big zone here, big zone, I think, because this goes back to spike highs and then during the last lows, but it's been really, and you can stretch it to June 2022, been trading a lot around here in this 115, anywhere between 115 and 116, and then you extend this to the 50% of this whole move, which comes in around 116.15, and this is a longer term one from 2015, and that comes in exactly around the same level. So this whole zone here on sterling Swiss is one that we need to pay close attention to. I did also let some of my longs go and monitoring what's happening here, and also monitoring what's going to happen on the sterling side of things this week, and the expectations for the Bank of England. If we see a big drop in CPI, I think there's going to be little reason for really pushing the boat and trying to go look for a break. If in turn we get a bit of a stickier picture on the CPI side, and Bank of England expectations need to be repriced a bit, this could easily fly through, and then we open the skies for 119, I think. But first things first, data. All right. Yeah, dollar Swiss is just my feeling on the dollar right now, and we came back to retesting this area, this area, this area. We're also in a bit of the 50% is not too far, 91.05, and my global feeling on the Swiss. So I decided just to take profit today between this 90 figure area. And I just want to see what's going to happen with the dollar really to start the week. So this is a bit of a P&L protection exercise that I'm doing at the start of this week. Take the profit and see what happens. So 91.05, guys. If 91.05 goes, then we're probably going to push through. I know very long term pictures are looking for a move back up to 94s and even 98. But in the more shorter term, I want to respect this level first. I can always re-enter. Will only be 15, 20 pips that I'm going to miss in the way up if it has to go. And then 91.5 as well is going to be the next level to keep an eye on. All right. Let's look at what people are saying. Ali. Okay. Yeah. Those longer term things. Okay, maybe Ryan will answer as well. But the thing is, it's been quite difficult to have really long-term positions in post-pandemic because we've been in accelerated cycles since the pandemic. So it's been a bit difficult. But you can trade those what we call pendulum swings, and you can have positions for like a few weeks if you want on big reversals, which have been, for instance, I've my Swiss positions, and I've been talking about that with the people that I mentored with in our coaching program as well, how to construct longer term positions, or at least positions for more than just a few days, for the dollar Swiss or the euro Swiss or the sterling Swiss, for instance. There were fundamental reasons, and then the techs have been supportive also for building up those positions. There are still opportunities, but they're not always in in the majors or in the major like stuff like euro dollar, for instance. Everybody's always trying, because it's the biggest pair out there. It's the biggest liquidity pair out there. Everybody is always trying to find long-term pictures in the euro dollar. But then again, this morning we were talking about it. I think euro dollar is especially when you look at the European time zone, and if there's nothing like world shocking happening in the US, for instance, it's very often used like a tool to do all the rest, to construct other crosses and stuff. And for me, it's very difficult right now to find the long-term picture in the euro, and I don't need to have it, because there's other stuff moving around, like for instance the mix or the Swiss has been a really great mover. But I mean, in stuff like, I think we need to wait for Q3 perhaps on the euro dollar for a real bigger trend to develop. We cannot forget that the whole of 2023 we have been in what, 7-8 big figures range on the euro dollar. In historical levels, it's a very, very tight year, and it hasn't improved yet. It has not improved yet. I mean, this year, if you look at the we are 4.5 months into the year, and yeah, we've been to 111 and then to 106. We had this comeback of the dollar in Q1, which I thought may happen. I did a little bit, but I really expressed it via the Swiss franc. But you're doing those up and down moves, but real long-termers are not going to get very excited if you stick for most of the year. You take away the spikes, you're in a three, four big figure range, which is not extremely exciting if you look for long-term positions. All right. Okay, I just wanted to come back quickly on the sterling. And I have to go to the weekly. And I know technical analysts are going to tell me that there's not enough points there. But we've got a 1, 2, and then half a point here, a resistance line that I've drawn coming all the way from 2007. And that thing is right now is just above 127.30. Well, give and take a few algo pips, or the thickness of the lines, I think 127.5. 127.5 this week is going to be of relative importance, and this fib as well coming in around 127.5. I think if sterling this week, and hopefully we can have the answer to this question on Wednesday. Hopefully we have the answer on Wednesday. But if this 127.5 goes and holds, I think really this cable could go for a bit of a walk for the rest of a week, or a bit prolonged period. Why not back up to those 129s if it goes? All right. In the meantime, we are in a bit of a zone here. 95.20, in my opinion, could easily turn around, and we go back to neutral, back to the 126, the figure zone. It's all very possible, but I am going to keep this zone at least in very close on my radar in the cable, because I think it's going to be interesting. And with that, Ryan, back over to you, mate.
Thank you very much, mate. I haven't got much more to add to what you were saying about long-term trading and trends, whatever. Ali, you have to define the difference between a long-term fundamental trade and running a trade, or trying to stay in a trade, holding a trade. They're two different things. If I had to pick one off the top, okay, something that's probably a fundamental risk of turning, it'd be dollar MEX. It's been a carry trade. It's been a carry trade for ages. It's had a huge move all the way down, up near 20s, up at 20s, all the way down to 16s. If you want to look for a long-term trend change where you might get big pips, you look at what would change that around. Okay, what would stop everyone piling into the MEX? Obviously, interest rates is one thing. It's 11% currency. So narrowing that gap between the US will change that trend around. But that's different between looking at a fundamental move for a long-term trend change. You know, go into a weekly or daily to see the overall picture. That's the big one you need to look at. So there, you know, 25s all the way down to 16s. If you want to change that around, something has to happen. So if you get this, if you know what has to turn it around and you start seeing the signs that are going to turn it around, that's when you start, you know, trying to build a long-term position. But that's not the same as getting in a trade and trying to hold it and letting it run and you know, just based on technicals or short-term noise. So that's what we need to look at. But that's something we can cross over in another show.
By the way, this mix is one that is going to we will need to pay very close attention to second half of the year going into the US elections. Then the thing for the mix can really start to heat up. So really watch out, especially if we get a Trump re-election. And then it's there could be really big moves coming in the Mexican peso, and I think in that case it could be on the defensive.
Yeah, so that's what you got to look for, things like that, and then you get in. If you can get in early enough, then you can ride some big waves. But anyway, enough's enough for today. Thank you very much for coming to the Flow Show. We know what's coming this week, so we're all set and ready to go. I hope you make many pips this week. Thank you, Kay, as always, and we shall see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.